I'm just gonna open up my screen sharing and we can kick this off. Got this here. Okay. Well, hope you guys can see my screen. 1 second, I think it's loading. Yes, perfect. So, hello everybody. Very great to have you all here with us and have this next session in our AMA event series from DueDash on business models. So, as you guys might know already, DueDash, if you don't know it yet, we are trying to help making startups investable, helping you on your journey, build sustainable businesses and being able to really become fundable and get to the point that you're able to convince investors. And as part of this, today we're going to focus on business models. And I will shortly introduce a guest, but before we go to that, just wanted to kind of add some words on our AMA series. So these AMA series happen every month, always on the second Tuesday. And we usually cover the topic that is aligned to our monthly themes. So on DueDash, we have themes every month to kind of get you up to speed on customer validation, business models, different topics to just give you some input sessions. And this month is all about business model. So why do we think business models are relevant? And we want to focus on this month. So your business models is your main source of revenue. It's able to sustain yourself, build something, and really have a business that will be there for a long time. Because if you run out of money, eventually you can only take it for so long. Grants will run out and your bootstrapping funding will only always be there. And also the business model and the money you make is proof that people really want what you're producing there. And to go more into in-depth about why the business model is relevant, I invited Philip Winner here from Adutabyte. He is managing director of Adutabyte and also one of the co-founders. And he actually is the guy behind their business model, how this AI company, made the revenues. So I would happy to have you here, Philip, and share with us kind of your inputs.
Yeah, thanks for the introduction, Michael. And great to be here. And yeah, when I got your invite, I was very happy to share our story, how we got here, and to share how we came up with our business model, which is, to be honest, till today not finished. So there's a business model is a thing which is developing as your company develops. So it can start completely different and then turn into something completely different. So you should always be aware that it's not written in stone kind of. I prepared a couple of slides to show how our journey was.
You can share them.
Yes, I can share them here. Perfect. Okay, you should see my screen now. Perfect. So just a couple of words to myself. So as Michael said, I'm co-founder of Adutabyte, and we are an AI company focusing on tour planning and fleet optimization in different sectors. And we came up with our idea in already 2017, I think, within the Fraunhofer context. So it's been part of the research institute there, and we developed our idea there, and then started to found our own company in 2019. We currently have 2 offices, one in Cologne and one in Munich, where I'm currently sitting, and have more than 10 employees, currently growing. And we got a 6-digit funding back in 2019, and currently we are bootstrapping our company mostly. So there's lots of request for our solution. So there's not that need currently to have a funding. I have background in management and in human factors engineering, both from Technical University here in Munich, and did a lot of work in the startup ecosystem here in Munich as well. To start with how we came up with our business model, first question was, what do my customers want? So we were very lucky to have customers at the beginning who we co-created our product with, and they said, well, for us it would be great to have a product where there's not too much initial fee, which consists of more separate monthly fees, which are not too high, and we are like willing to pay an additional fee for service and support and so on. And so we got lots of feedback at the beginning from our customers, and this is like the most useful feedback, because at the end your customers gotta pay your product. They're got to pay for a product, and so if they tell you, okay, we're willing to pay in this way, we're willing to either invest lots of money for an initial fee or to pay like a monthly price, then you get a really good indication of the market and what the market's like. We were very lucky to have as well customers who were really telling us, because one of them was a good friend of mine from the ambulance care sector, and he said, well, your product is worth around mid 3-digit euros per month. So he like really told us a fair amount of money, like what the market would be willing to pay there, and this was like a really great and helpful start to have like people who are really telling you, okay, from their market perspective and from their experience, if they can say, okay, this product is worthy. A second step is to always look at what's usual in the market, and we had a kind of crucial part there, because in our business model, we are charging according to the number of cars and the tasks we are planning in our fleet optimization. And we had to choose either to go for the number of tasks which we are planning. So if there's like 100 orders transported on 10 vehicles, and we got to determine like the best routes for these 10 vehicles. And we had the problem to either charge for 100 tasks times a certain amount of money, or to go for 10 cars times a certain amount of money. And there was like a gap between the opinion of the customers and the opinion of the market. And the other competitors, they all had a business model where it said, okay, it's like, for example, 15 euros per car, and I'm not interested how much tasks we are planning on each car. But the customers said to us, well, okay, but what is if my employees, they are sharing the car, or they have like not full day shifts, or they are kind of flexible? So why do we have to pay for a car which always stands around? So then they said it would be more fair to do this like to do it order based kind of. So it's really and as I said, as I see on this example, it's really hard to make a decision there, to either go for like what's usual, to go for what's requested by the customers. From my perspective, I would rather go for the customers, because they gotta pay at the end. But if you come up with a completely different different business model, which has not been on the market out there, it can be tricky as well, because customers, they are not used to it. So they see something completely new, and they might be like a bit insecure whether this is a great offer or whether not. So it's really tough question there, and to find like the best solution. A third perspective which can help like for really initially finding out, or to go like first steps finding the business model, is to have a look what others do. So if you, for example, like selling a product in the healthcare market, and there's like a similar product in the logistics market, or in the sports market, or wherever, then you can like use their model for first indication. So you can have a look there and say, okay, well, they are charging per whatever, they are charging this amount of money per month, and you can like figure out what are like the parts of the business model, and like can transfer these information to your market and your product there. It can also help like to have a look at your competitors, of course, because if they are like a startup, if they do a great job, they did all these research and all these analysis as well, and if they did a good job, it's a very good indication a good first indication for your business model, to just have a look at your competition and to see whether, okay, for example, I'm charging 10 euros per month, my competitors are charging between 5 and 15, then you could say, okay, like I'm like in the middle of my competition. Or if you're like at 100 euros per month, then you know, okay, I really have to provide like 10 times the value to offer my product for 10 times the money. So it's a really good indication to have like look at the competition and at other markets as well there. Another very important perspective you always have to bear in mind is, does it all fit with my costs? Because like the best business model is not worth it if you cannot cover your costs, and if you cannot like reach the margin you wanted to reach. And there it helps as well to calculate like bottom up and see, okay, well, my costs, including all these costs, like all these customer acquisition costs and marketing and so on and so on. So there's lots of costs, and you can like break them down to one customer, and then you get a really good indication whether you can cover your costs like with this customer, break them down to this customer level. So for example, if you end up like, okay, my costs per customer are like €7.50, including customer acquisition, including a certain customer lifetime value, including service and support and so on, like breaking it all down, then you cannot offer your product like cheaper than, for example, €20 if you want to make a certain margin there as well. And if you did all your job quite well, then you can have a really good indication for your price tag at the end, because at the end the business model, it results in a certain price. Like business model is more than the price at the end, but at the end, you as a founder, you will always be asked for a price. Never had a customer who wasn't like asking in the first or second meeting, okay, how much is it? And if you did all this quite well, then you you really come up with a good indication for your price. So it's going to be, of course, more than the costs. So you can like calculate a cost-based approach from bottom up, come up with a price. It should be as close as possible to the value which you are delivering, because the value it's like indicating really good how much your possible customers are willing to pay. So if you're like saving them 10,000 euro per month and are offering a product like for 500, then it's a pretty good deal for your customer, but a pretty bad one for you. So you got to get as close as possible to this the value you're delivering there. Then you either it's depending on your strategy, gonna be cheaper than your competitors if you're like going for a large market share and like trying to get your margin later on. Then you would go for cheaper than your competitors. Or if you say, okay, like I'm a really good high-tech solution and I'm offering much better solution than all my competition, and I want people to pay for this, and provide like a really high-class product, then I can decide going for a higher price than my competitors there. And at the end, have a look at what's like usual in the market. And if you like write down all these numbers, then I think you're like quite safe to have like your price tag there, and then can like split it, for example, in customer, in service costs, in a base fee, and so on. So like all this topic around pricing is like would be another session to have like on all these pricing mechanics. But there, if you prepare this, you're like pretty settled for this. So this would be my couple of slides for introduction, but I'm here to answer like your questions and to dig deep into your specific problems and your specific questions. So I would hand over to Michael, who's like collecting all these questions, and I'm very happy to answer lots of them.
Yeah, first, thank you, Philip, for that input. Very interesting from the different ways of how you can come to your business model and derive that. And I think very happy now to go into the questions by the audience. And we already have one, which is by Perul. What kind of checks and balances should be in place to come up to the magic pricing?
Oops. What kind of checks and balances should be in place? Yeah. Well, that's really tricky, a really tricky one, and I think it depends on the market and on the product you're offering, because it's like different if you have a software product, if you have a hardware product, if you're offering an app, if you're offering whatever. So I think this one should be, or it's very hard to answer it like in a global way, but of course it's all about the personal costs, it's about your support, and about your customer acquisition. It's about all these base costs you're having, like setting up your office and so on. So there's lots of different piles like adding up there, and so there's a basement or base for every business, but then I think it divides up in where you're at with the startup.
Curious question, then also kind of follow up directly here on that. Do you use specific tools also to keep track of all these checks and balances, you know, or do you use like standard Excel sheets?
I recently searched for one. So if there's someone coming up with a great tool like for doing a dynamic business planning or a dynamic financial planning, I haven't seen a great tool for especially for startups to like track all this. And so we have like a Excel with I think 20 sheets and 100,000 cells. But this is kind of well, I'm not too happy with this process, because if you have like some fault in there, then like it's going to not too good for your business. So if there's someone coming up with a great tool, I would be happy, and this person could make lots of money.
Good to know. Let's go now to Vanna. Is there a way to modify simple revenue model as per our business and make it effective?
So what do you mean exactly there?
Yeah, Vanna, maybe you kind of add a bit, or you can unmute for a second, because I'm also not 100% sure what is meant.
Yeah.
Vanna, because I see you on the screen. Just you're muted. You have to unmute yourself for a second so we can hear you. Yeah.
Okay. Am I audible now?
Yes.
Yeah. So my question is regarding the revenue model. What is the best way to validate your revenue model and to test? So it's
wait,
like
Philip,
different businesses.
So the best model to test your revenue model, the best way. Well, at the end, what we did was like going out and just offering a certain price and then see. So we did lots of like last week we did lots of calls to evaluate our new pricing model, and just offered it to the people, and there were some saying, okay, this is far too high, and then we were like, okay, good, and it's just as an university, it's just hypothesis testing. So you have like your hypothesis, okay, my product is worth 200 euros. Then you go out there, and if there's like 80% saying this is far too high, I would never pay this price, and that's it. So at the end, I think you won't. It's not possible to evaluate it like at your desk. So at the end, you gotta get out and either, or what most startups do is they sell their product at a too cheap price. So most of founders are not selling it at the value they're delivering, but this is like, in my opinion, due to the funding strategy, because it's of course it's great for a VC to see okay, there's like 1,000 customers paying a low price, and then you can like prove your product market fit kind of, and then like go up with your price, and I think this is a better way than to have a product at a higher price and just have 10 customers. So this won't. I think if you're like raising money, then you're better off to have more customers at a cheaper price than less customers at a higher price. But it's just a personal opinion. But go out there and just test it and then adapt it.
Then I guess going forward from that, we have a question on willingness to pay. So what about the willingness to pay as a pricing anchor? What do you think about that, Philip?
That's tricky. So like all this pricing, it's like kind of a science for for itself. There's a great guy doing pricing workshops as well, or doing like pricing stuff for free. He's called Christian Wirth, and I have I've had a workshop for him. I've had a workshop from him where he said that like you can use like these anchoring methods and willingness to pay as an anchor, but you get to be like careful if you are or like you have to carefully evaluate like the willingness to pay before, if you're like trying to use it as an anchor, kind of, because depending on how good you know the market or not, it can be tricky and could lead to not the best results. But yeah, at the end, this all the pricing and the psychology of pricing, it's a really great topic. Yeah. Did it answer your question?
I guess that's a yes on that. We have a question by Mohammed. So what is more important for early stage startups over ones in growth stage? To maximize cash flows or to focus more on profits? And how do you incorporate this when considering your business model?
Oh, wow. This is really a great question. And as always, I would say it kind of depends. So if you are, from my perspective, if you're searching for investor, and if you like to go the investor's way, I would go for maximizing cash flows, because if you're searching for investors and like have investors in your company, then like profits they don't really care at the beginning. For them, it's important to see, okay, there's a product market fit, your company is growing, you're getting more and more cash flow, and the profits, it's going to be like Series A or so. But if you try to bootstrap your company, then of course you have to focus on the profits, and it's both. It's hard ways. It's a hard way in any case. And how do you incorporate this when considering a business model? Yeah, at first I think you have to decide whether you want to go the investor's way or whether you want to bootstrap your company or go the non-investor's way, because I think this decides whether to go for one or whether you go for two.
Then here's a question, I think, on how to find the right pricing. I guess there's some explanation here on like cost, fixed price, pool, but I guess that alleviates basically, like finding the right price in the end. When we have like cost plus X margin, is that the price? What should be this X?
The X, I think it depends as well on the market and on where you're into. So the X, I think if you're selling like washing machines, the X for margin, I think is around 5 or 6%. And if you're like having a software company, the X, like the investor's dream for the X would be around 80%. So so there's always what I heard from investors, where they were always searching for like 70 to 80% of a margin. And this is, it's really high, and you really have to track, and this is a really good, it's really important advice. You really have to track all your costs, your costs leading to one customer, because to have like a margin of 80%, and if you have like 4,000 euros customer acquisition costs regarding all these leads you lost on your way to convert like one customer, then you gotta have like a 5-digit price tag. So it's really, really important to track all these costs adding up to converting one customer, and then you can from there you can like add your 80% margin and then have like your dream price. But from reality, I can tell you that like reaching 80% or reaching even 70 or 60%, it's really, really tough.
Then I guess there's just like also follow up by Paul to come to prices. So she kind of says that you can take your company as an example to come up with pricing. In today's world, marketing costs are not predictable, especially in digital marketing space. So what dollar or euro sum can be allocated to that when building a company or testing a product?
This is a really, really tough question, because like he answered it like at the beginning, it's kind of not predictable. And there, if it comes to digital marketing, I think it's about testing there as well. So if you're trying to test, like if you're trying to test your product on Google Ads, for example, I would like recommend just to take like 500 or 1,000 euro and to test there, and to test like, okay, I got like 200 leads, then I called these 200 leads. This added up to 80 hours of calling, and this meant at a I cost like, for example, 30 euros per hour. So it's 80 hours times 30 euro. Then I called them again and again and again. And at the end, I know, okay, like these 1,000 euro plus all these follow-up costs, it ended up in like five customers, for example. And these 5 customers were like 10,000 euro at the end. So each of these 5 customers was like 2,000 euros, and then I gotta add my margin and then come up with the price there. But we tested it, digital marketing as well on Facebook, for example. It took like 200 euros for a Facebook campaign. Just had a look how many people we could convert, and then like add to our sales funnel.
And coming to that, we have a question by Hitesh. So he kind of like gives an example. Imagine you have 2 products, or I'd say first, one product is selling for 20 euros and another for 50 euros. So you said it doesn't matter if a 20 euro product is better than that other product for 50 euros, but because it's 50 euros, people feel it's more expensive, so it must be better. So can we avoid this kind of human fallacy of thinking cheaper products to not be of superior quality?
This is tricky. This is tricky. I think what I saw from our perspective in the software company, with the high price, people really expect a higher quality. So I think, it's like better is like can be several aspects. So you can either provide a better service, you can provide a better product, you can whatever. So but I think it's really hard to avoid this. What you could do is like having the 20 euros and or like selling the 50 euro product for 20 as well, and then adding like a couple of small costs for service and support and so on. So you could like break down the big number in smaller numbers, and then it could be more attractive, for example. But I think comparing 2 products, hard. Yeah.
Just see, have a look. Shruti Hara said, should we use different business models for first year of a business and for later years? Ah, okay, if it's different business model depending on the first and later years.
You can, in my opinion, you can do so. So there is a couple of startups focusing on like getting a huge customer base and selling like with a cheaper margin at the beginning, just to get like a great basis. For example, if you're an AI company and you need like 500 customers to train your model and to provide an even better service, then I think you can, of course, like ramp up your first customers at a very cheap price, and then change your business model. So I think especially in the first year, and if you're going for the investors way, I think you can like choose a business model where you're going for a big crowd and a big crowd of customers, and then have your real business model in mind. But it's, at the end, it's always important to have like your final business model in mind, even if it's going to change. Because the investor is going to challenge you if you have like a too cheap business model. He's going to detect and it's going to challenge you. But you can of course change it.
Cool. As I saw you have your video on and you added some points before on like pricing. Maybe you want to add something for those who don't know Parul. She's like also one of our co-founders from DueDash.
Of course,
because you wrote a couple of stuff on pricing. So
yeah, I was just trying to kind of ask some questions to Philip, not from a point of view to trick him, but perhaps he could take examples from his startup and how he tested and iterated. So that could perhaps help things in perspective for others. Yeah, but I'm happy to chime in case there is any opinion needed for any specific point which was not clear. Guys, please feel free to drop in the chat. I mean, Philip is definitely trying to do his best and trying to provide best answers, and that's why he keeps saying it's tricky, but he's actually giving very valuable input there with putting the numbers and trying to test. I hope you guys are taking those tips there, but if there is anything unclear, feel free to let me know and I'm happy to chime in.
Right. Otherwise, let's follow up then, I guess, with by Marcus. You had a follow up actually on the question before from Shruti Hara. How do you feel about discounting or free entry models in the beginning? Does it make sense or not?
Kind of, yeah. I think it's the same. It's the same. Kind of the same what I said at the beginning, and I think especially like the first customer is like your gold customer kind of, because like the first euro, it's like the largest gap kind of. Afterwards, it's going to be easier kind of, but the first customer who's going to pay something to you for a certain product or service, I think this is like the largest gap kind of. So of course, if there's someone who's like who's saying, okay, well, this is a great product, I believe in your company, why not having some discount or even free at the beginning. So we had like free trials for 2 weeks or 1 month and so on at the beginning as well, just to get people onboarded, just to test our product. So I think at the beginning, if you don't need the money from your customers, and if you're like well funded, then it can really help you to have some discount. But you should like be critical there. not to lose your product market fit then in the mid run or in the long run, because you can convince people really easy to like go for a free product, but you're not you cannot be sure whether your product is like then what the market wants. So at the end, I would go for a cheap price, but not free for a long time. Free trial, perfectly fair, but not like free for 2 years or so.
I think was interesting because I remember I think Parul mentioned this in the past also, don't start with too cheap prices also. Be careful, you can discount, but don't go like if you start with 0, people will assume you will always be kind of the value will be 0.
Yeah, of course, yeah.
Let's just take further. So then I guess Hitesh had another question. Is it always good to one-up your competitors and always basing your strategy to be better than some other company? Sometimes I feel companies spend too much time on the competition rather than just focusing on the values. What's your opinion on this? How important are competitors in a business model?
Yeah, of course. If you have like a product which is providing really good good value, and your customers are like paying for it, then I don't want to say that then your competitors you shouldn't care. You always should care for your competitors. So I really like spend hours each week to just have a look to track all their social media and so on, and to see what they are doing, because at first there will always be customers who are sitting there and who have like different offers from different companies, and then of course the value counts, but if you don't have a look at your customer at your competitors, you don't know whether they are even providing a better value. So I think it's very crucial to have like a focus on your competitors, and from my experience speaking to an investor, when it comes to the competitor slide, this is the slide they are going to destroy you. So it's a really tough topic about the competition, and you really have to be aware of your value and be aware of your value compared to your customers, to your competitors. So I think it matters both competition and your own value. And how important are competitors? You either if you're offering a product like in a market where there's lots of competition, there's like two general strategies. Either you go for a cheaper price and go for a maximum amount of customers and like flooding the market with a cheap price product, offering the same value as your competitor, or you go for a high class product and you say, okay, I'm offering a more sophisticated product, and you either gotta pay the same as for a competition, or you can even charge more there. But I think it all comes down to the point that the competition is really important.
There's a follow-up question also by Mohammed, and he also wants to thank you for answering his first question. And he has another question, a bit different, to kind of focus more on your startup and your experience, and said, if you had 6 months to 1 year before going to investor, which changes would you do in your startup to maximize the valuation of your startup? Maybe before Philip answers that, actually, I found this funny. We have like on our startup nuts and bolts course, I think a section where Parul mentioned, don't focus too much always on your valuation. It's a typical mistake that many founders do. It's like valuation is everything. Maybe Parul, you want to add something quick before Philip can also add his points? Because you're an expert on that.
I'm not an expert, Michael. I can provide what I think about it, so my opinion there. So I think it depends what you want to do, right? And where you are on that journey and how much can you bootstrap before you really want to go to investor. So it depends, every startup and every founder has their own journey. To maximize your valuation, the only thing that the investor would be looking for is your user growth and what traction you have got by that time. Where is your product in that journey, and are you generating some revenue if you're looking for a higher valuation? But nonetheless, valuations are very subjective and they are dependent on market dynamics. So even if the startups which were like, I've seen in the COVID market, the startups which had really high valuations, they were available for really much lower valuations. And on some of the startups in frontier tech, which were suddenly needed because of social distancing, because of whatever reason, their valuation wasn't going so quickly high, suddenly their valuations went up. So it totally depends. And there are several factors for valuation. There is no single answer for that. But macro factors, if you look at the macro factors in any market, in any industry, it will always be your users, it will be always your traction, revenue, and where is that S curve going to hit you. So hockey stick everybody wants to see, but when is the S curve going to come, a typical S curve, and what would be your next S curve? So if you have done those thinking, if you've done all of that, then it's a good response to investors.
Anything you want to add, Philip? What you would do like with Byte on valuation, or if you think it's how relevant this is for you?
Yeah, like as it's like the perfect answer which Peru gave. So and I would like to add that like the valuation, and I learned this in a negotiation workshop. Valuation is like one of a couple of points in your term sheet. So you can like get a high valuation, but then have like terms which are going to destroy you if you won't like reach your targets. So then you have like your some down round terms and so on. So there's lots and lots of terms in these term sheets, and if you see like startups raising like 2-digit million amount of money, then you can be sure that there's going to be a very hard contract around this amount of money. So money comes never for free, and if you get like a high valuation at the beginning, and I recently saw an interesting study that that the startups are getting higher and higher valuated in the seed rounds, but then they I think more and more failed to like meet all these expectations in the Series A, and then like got a down round there. And this is like the worst which can happen to you as a founder, because like having a really high valuation there, then going in down round and like losing half of your company, I think then it would be better to go for a smaller valuation, like for example 5 million instead of 10, and like negotiating better side terms or better other terms. So, but I think like due diligence and all these topics, it's a really hard topic. But like for this question, as Bruce said, it's traction. It's all about traction.
Another value that I guess Vandana is like asking about is, says like, I feel human nature is to look for point of comparison to establish value. My question to you is how to control these points. I'm not sure I fully understand the question here. I feel it seems to have something on human touch, but Vandana, what can maybe you can explain this a bit?
My question is around the product and the quantity. So how would I make sure that if I want certain amount, certain value of product or certain quantity of product to be taken by a customer? So how would I control that?
So the easiest to control to like at the end you want to get paid for what you say. Okay, this is my value. And I think the easiest way to get paid this is to show your customer that this is really the value. And for example, if you're offering a software tool and say, okay, this tool is going to save you 10 hours per week, and so I'm going to charge this tool like 400 euros because I know your workers are like they cost 15 euros per hour, and it's 40 hours per month times 15 euros. So it's going to be 600. So, and I'm going to charge 400, and then it's a good deal for both of us. And then your customer can say, okay, well, you're not going to save 10 hours, but 5. So I'm going to make a loss there. And the best way is to show, and there it would be a great it would be a great point to have a free trial, for example, for 2 weeks, and just tell the people, okay, you can just try, you can see how many hours you're going to save, and then we're going to talk about the price later. And if you're going to do this 10 or 15 times, then you're sure that you can save these 10 hours, for example, and then you can like be very convinced that after this free trial he's going to be happy to pay these 400 bucks. So at the end, if you have the possibility to really show your customer the value of a product, then he's going to be ready to pay this.
Thank you.
Where's the question by Rohit? I think he had a network error before. Maybe you can just kind of like shorten up that. He just asked, which customer segment are you focusing on? What is your business vision? Because a bit like he missed a bit for network error in the beginning. So maybe just very shortly for him. He's not. He didn't write it. Like he wrote it to me privately, I guess. So it's like you just said, which customer segment is like is a DueDash focusing on, and your business vision.
So we are focusing on the healthcare market, on the ambulant healthcare market. So it's kind of a small 20 billion euro market in Germany. And we took like this niche market to really develop our product in this niche market without too much competition. And it was like a great market to start with. And I would like recommend for each founder, if you have the possibility, then not go for the big market first, because it's easier to really break it down to a niche market, establish your product there, and then go for the bigger markets, because you can like set up your company, you can set up your product in this niche, and then go for the bigger markets. And our vision for our company is to provide dynamic optimization tools specialized for several companies and for several optimization problems throughout different industries. So we are like we started in this small sector, started with tour planning, but at the end we can do like bunch of different optimization things there in several markets. So we're currently focusing on, I think, 4 verticals. It's ambulant care, it's waste disposal, it's pharmacies, and food. And these are our verticals currently, but we're establishing vertical by vertical.
We have 2 more questions, and I guess we'll just go through it and wrap it up. But of course, if you guys have later on more questions, feel free to drop a note, to Philip, to us, anything you guys want to know. Let's just go through these last 2 questions. One is by Abhishek. What is the most important factor one needs to consider while making a business model for her startup? First, customer validation. 2, demographics and market. Or 3, competitors. So customer validation, demographics, and market or competitors, which would be most important?
Investors are going to ask you for all of them. So at the end, you really should focus on all of them. So customer validation is, of course, the key point, kind of, but to show this, if you have like a great customer feedback in like a really small market, you should think about whether to start a business there. If you have like a really big market and very little customer validation, you can say, okay, there's like 1 in 1,000 people are going to buy my product. So at the end, I'm going to have my business case there. Not too ideal as well. And the same is for competitors. If you have like a really big market with lots of competitors, it's okay. If you can prove your value, you can establish a company there. If you have a small market, lots of competitors, Red Sea wouldn't go in there. So at the end, you have to balance all these. But what most startups I got to know struggled with was like the product market fit, and it's so hard for founders to really get to the point where they say, okay, our product and our business model and all this really hits what the market needs. And so if I would have to make a choice there, it would be customer validation, but please keep all these in mind. So you really got to balance all these, but never lose your customers.
And I guess you have like the final question, I guess, seems like fitting. Well, you know, like the business model is always a work in progress. One always needs to iterate, you know, get the best results, you'll make changes. But what were some of the mistakes or assumptions that you made at the beginning? So something you would suggest to avoid?
Yeah, at the beginning, like we had the same problem. What I mentioned earlier, we offered our product too cheap, kind of. So we were like searching for first customers and got positive feedback and was great. And we were not, we were convinced of our product, of course, but somehow we weren't courage enough to, or didn't have the courage to like say, okay, our value is X and we're going to charge X minus a certain percent. So I think you really have to be convinced of your product and be proud and go out there and charge what you know or what you proved what the value is. So really like stick to your value from the beginning. And the second point, we focused a lot on building the product, and we focused a bit too late on selling the product. So we like built up all our technical competence, and we now have a really sophisticated product. But we built up the sales team a couple of months too late. So if I would found another company, my first employee wouldn't be a techie if I have a good one on my team, but a salesperson to really sell like the first version of my product really early, and to really get like fast customer and market feedback. So you gotta employ your salesperson first.
That's a good point, I guess, on business models, you know, that everybody is always focusing on, you know, tech, build your product, which is important. Like you shouldn't start a company with 3 salespeople. I think that if you want to build like an app, that wouldn't work as well. So definitely.
Start selling really early. So it's because then you get feedback, then you get your first money, and everything's going to be much more easy, much easier than if you hire a great techie, build a great product, and then the market says, well, great product, but
Yeah, I think it's a good point also, I guess. Captures the current trend of people saying like we need to go more, let's say, from unicorn to zebra startups, be sustainable, have mixed revenues early on. I think I heard very recently, I think it was today in another session, like a founder, she had already an exit to, I think Snapchat, she made an exit. And then she kind of said like with her second company, what she wanted to make different is to have early revenues. She said she didn't want to have like always just grow, grow, grow. But from a very early point on, you make money, you have recurring revenue, and when you get like the customer feedback from that. So I guess also for any founder, we shouldn't just always go after this elusive dream of building and then hopefully I will make money in 10 years. But why don't you try to make money in the first year, the first month? It's
Yeah.
possible.
Yeah, like a funny or funny tasks, a funny task for you. Research the business model of Giphy. So you probably all know these GIFs in WhatsApp and so on. Research their business model, research how much money they're making and what about their valuation, and you're going to be surprised.
No, it's great. Well, thank you, Philip, a lot for this input.
Yeah, welcome.
Said, if you have more questions, guys, feel free to add them on DueDash, because I think the time is up from our side now. But thanks a lot all for taking part. I hope we could answer your questions and you can continue building your business model. And I would suggest all of you guys, on DueDash also put in not just your questions, but also what's your business model. So our monthly challenge this month is also just describe, please, your business model in a couple of sentences. So I would kind of ask you, jump over to DueDash, share with us your business model, what you're working on, and we can, of course, give you feedback on that. Yeah, and again, thanks, Philip, and thanks all for attending.
Was a great pleasure and was a great session. So thanks for all your questions.
Great. And a good evening to all of you guys.
Great.